Okay. All right. Okay, let's get together now. Let's get together. So, like I said, I want us to kick start by doing revision here. Okay, guys. So these theory questions, can everybody see? Can you see now? All right. So these theory questions should not have given you problems. Okay, assuming that you've obviously been practicing. Okay, but honestly speaking, these theory questions, you know, there's only so much we can do in terms of theory. But if you've gone through my slides, this, and you were there in my lecture, you should be okay in this regard. Okay? So, first thing that they asked, they wanted us to obviously state which account they are talking about. So, number one, they said the supporting document that shows all the important details pertaining to a particular asset. What source document speaks to all the details of a particular asset? The asset register, okay? Asset register. All right. Then number two, they said the account to be debited when recording the depreciation adjustment. If you got this wrong, guys, I'm tired. I'm resigning today. Okay? This you should not have gotten wrong of all of them. This one, I refuse. Okay, what's the answer here? No. The account to be debited. Did you get it? Bring that script here. Hey, bring that script here. It's what? It's depreciation. It's fine, you can keep your script. But make sure you remember this, okay? It's depreciation. All right. Then the next one, also known as, this is supposed to be as, all right? The fixed installment method of calculating depreciation. What's the answer here? Straight line, yes? What did you write? The straight line method. Okay, this is the straight line method, and if you had also written cost method, I would have given you the mark. Does that make sense? But you should be writing straight line method. But I know in your questions that you have, in all your assignment questions, they say depreciation was done at cost. And then we obviously know we're using the straight line method. But if you had actually written cost method or something to that effect, I would have given you the mark. But straight line is the best answer there. Then the next one, the account that holds all the depreciation on a particular asset from the day of buying the asset until the asset is disposed of. Again, this is one you should have gotten. What's the answer? Accumulated depreciation. Now, some of you, I think, panicked on these theory questions. I don't know. But it seemed that way. Okay? Right? And it happens. It's okay. All right? But now we need to learn, how do I keep my composure in a test or exam setting? Okay? Right. And this is why we give you a test before we go give you an exam. So that you can, I was going to use this big word, but I feel like it won't roll off my tongue right. I might just make a mess of things. Okay? All right. So the last one was when the selling price of an asset is less than the carrying value of an asset, this general ledger account is debited. Oh, if you got this one right, well done to you. Because I love this question because it forces you to apply. Not only must you be listening in lectures, but now you must be able to apply, to think and say, what is happening if the asset, the selling price of the asset is less than the carrying value? What is happening? What if we've experienced a loss? So, which account should be then debited when we are now experiencing a loss? Nope, it's not asset disposal, but asset disposal is involved in that double entry. Can you see now why I love this question? Because if you know your story, that's the only way you're getting this one. If you don't know your story, sorry. On to the next. So what's the answer here? Oh, somebody in this class got this, I'm sure. Yeah. But I want to give you the exact correct best answer for that. Yes, because we experienced what? A loss. So loss on sale of, there you go. This is why I love this question. Okay? Loss on sale of asset. Okay, this is why every unit that we've done, what do I first do? What do I first do with you guys? Do any calculations whatsoever. What do I do? When we go through, in a sense, what do I display? Slides, right? We discuss what is actually going on in this unit. Because if you don't get it theoretically, how are you going to answer these type of questions? Does it make sense? All right? Even the calculations, you won't get them right if theoretically you don't know what's going on. Okay, then next thing they asked us, explain what you understand by each of the following. Accrual concept. How many of you got 3 out of 3 here? Yeah, boy. Allegedly. Someone, okay. So, all right, let's talk about it in the break. Let's talk about it in the break, so because I don't want to lose time on this. All right, so the accrual concept. What are we saying with the accrual concept? Somebody who's very confident in their answer, tell me. We're revising, isn't it? You guys cried for revision. So I mustn't be up here teaching, isn't it? You guys must be talking to me, isn't it? So talk to me. What is this accrual concept? Others are looking away. What's up? Talk to me, guys. What is the accrual concept? Why are you acting like you guys didn't pass? Huh? Okay, guys, so the accrual concept, we're talking about how everything needs to be recorded when it is incurred or when the transaction has taken place. It must be recorded in that financial period, not necessarily when it's earned or when it's paid for. Does that make sense? So you are supposed to write something to that effect, and then you're also supposed to say, therefore, incomes, right, must be recorded when they are earned, not when they are received. Expenses must be recorded when they are incurred, not when they are paid. Those are the key things that were somewhere in your answer. All right, and that's why most of you got 3 out of 3. Does that make sense? Okay, so as long as we saw that logic, then you obviously got your marks. So that was that theory question. Then the next one, what did they ask you guys? Hey, here, if you did not know your story, then this one was also going to be quite challenging. Why an allowance or provision for credit losses is categorized as a negative asset? Why? Some of you, whenever I say why, but why, you look at me like, sir, but why are you asking this? Now you know, because they're going to ask you here. Mm-hmm. Okay, so that was a great response, a great answer. The only thing, you should have actually said what asset? Debtors. There we go. Okay, and you obviously got what? There you go, because everything was answered there. Okay, so here you need to not only understand what is allowance for credit losses, but you need to know which asset does it affect. Okay, so we know that it reduces our debtors, and that's why we're calling it a negative asset. Okay, Making sense? All right, let's proceed. So that was your theory, guys. That was your theory. Then we moved on to the meats, the real stuff. Next, this is where things got interesting. Okay? All right, and I like when I looked at this paper when you guys wrote, because you guys wrote what on a Wednesday, ne? Wednesday, 8 o'clock in the morning, Monday. Wow. It was either Monday, Tuesday, or Wednesday, one of those three. It was a Monday. Okay, cool. As soon as I got your script, immediately I looked to see what were these people asked. And I saw they were asked the general journal and they were asked the post adjustment trap. And I said, these guys were given such a nice paper, such a fair paper. Because what? We've done these things. All right? So, what were they asking for? They said prepare the general journal entries. They have written entities for some reason. To record the following. Sale of the machine on 31 March 2021, including cash transactions, all right? Then the purchase of the new machine on that very same date, including cash transaction. And then finally, depreciation for the year ended 31 December 2021. Okay, so if we read our question over there, it read as the following, or communicated the following. And now let me switch on my thing. Guys, I want to see how many of you did the timeline? Hands. Did that help or hurt you? Those who didn't, did it help or hurt you not doing the timeline? Did you total? Did you at least get 20 out of 25? Those who did not do the timeline. Guys, we're revising. We're trying to see where we went wrong, where we did things right. Because then you know, in the exam, I must continue along this path or I need to alter. Does that make sense? So I'm asking you this for no other purpose but to ensure that we move wisely in future, obviously. Okay, so just in the interest of time, we know that our year end was 31 March, ne? 31 December. 31 December. So these guys made your lives easy. 21. Why do I say that? Because they gave you the regular calendar year as your year end. Does that make sense? So we obviously know our year started when? 1st of January. 1 January 21. So this is our financial year. Okay, within the question it said on 31 March 2021, Poppy Traders sold a machine, an old machine, which was purchased for 6,000. So it's sold. Okay, so this was what? Let me do this in a different color. 31 March 21. We sold. Okay, a machine which was purchased. So here I'm going to say cost price 6,000. Okay, they didn't tell us when. The accumulated depreciation on 31 December 2020 was 4,000. So that's here. So here I'm going to put this in a different color. I'm just going to put AD. Guys, so you guys, you've been practicing, you've been working at these depreciation questions. Okay, I'm going to assume. So you've already started to build. You might not have done it the way I did it, but you've begun to build your way of doing this. Does that make sense? Okay. Then we go on. What else did they tell us? The machine was sold for 2,400 cash. And we know that it was sold when? On the 31st. So SP, let me do this, selling price was 2,400. Okay, cash. All right, maybe let me do this also, cash. So we know how it was disposed. A new machine was purchased, 11,000 cash on 31 March 2021. Okay, so on that very same day, we also bought a machine. So I'm going to put B for bought, okay, and that was for 11,000. Okay, and again, this was cash. All right, that's fine. Yeah, no, that's fine. Then Poppy Traders writes off depreciation on machinery at 20% per annum using the diminishing balance method. Okay, all right. I think we can just write that in. It doesn't really matter. 20% on the diminishing balance method. And then it says Poppy Traders has a 31 December financial year end. All right, no, that's fine. Cool. So that's all the information that we need. All of it is there. Can you see now? I don't need to go back to my question because I know what they want from me. They want me to do the general journal, recording the depreciation for the old asset that was disposed of, and obviously then do the asset disposal, because whenever we dispose of an asset, we have to do the asset disposal. And then obviously record the depreciation on the new asset that was also bought. That's all they needed me to do. So let's do it. Let's do it. Okay, all right. So step number one, you guys tell me. Asset disposal. Was this asset disposed mid-year or at the beginning of the year? When was it disposed? Huh? It was disposed mid-year. So what's our step number one according to a mid-year asset disposal? How? How did you guys answer? Yeah, that's what we need to do. We need to calculate the depreciation on that asset. Okay, so how do we go about it? What color should we use? You guys, why are you guys acting shy now? I don't know. What's happening? So what do we already know? How do we do it? We know, okay, we know this is on diminishing, right? Diminishing balance method, right? So what must happen? 6,000, yes. Yep. Minus accumulated depreciation, which is 4,000. Okay. Because remember, since we're on reducing balance method, we're saying carrying value times the depreciation. Right? So here we've got our carrying value, and then 20 over 100. 3 over 12, because we only had this asset for 3 months into the new financial year. Is that right? Not so? Okay. Okay. Right. So, what do we get? What do we get? You guys, didn't somebody get it right on their script? Is what? Ah, you can't do that to me. You can't. Come on. You guys cried for revision, right? All of you. You get 100. Yes, it's 100. Okay? So if 100 Rand depreciation. Okay, on the old asset. So remember, guys, because we are disposing of an asset at mid-year point, right? That means within this financial year, we had depreciation on this old asset. All right? So the first step, who remembers our process? Does anyone remember our process? Okay, who wants to attend? Okay, a chocolate for whoever wants to attend. I knew I'd get a reaction. Okay, so the process, remember, step number one. This is of a regular disposal. Ne? Step number one, we're removing the cost price of the asset. Step number two, we're removing the accumulated depreciation on that asset. Step number three, we're recording the sale of that asset. Step number four, what are we doing? Recording whether we made a profit or a loss on the disposal of that asset. Okay? So, you need to know these steps. That's a regular disposal, right? So that's a disposal, assuming we had disposal of the asset at the beginning of the financial year or at the end. But we have a midpoint. Okay? Now, now, if we had a midpoint, the first step before you get into those 4 steps is to record the depreciation on the asset, which is what we've just done. Okay? But now, because we know we're also going to need to calculate, or we're going to utilize the depreciation on the new asset as well. Because remember, when did we buy this new asset? Also, within the financial year. We might as well calculate this right now before we start doing any recording. Okay, guys, you need to know those steps. Okay? I don't know if you guys are looking at your phones during the test. Okay? Because most of you seem to be on the right course at least. Okay? But you should know that off the top of your head. Does that make sense? Okay. Right. So the depreciation on the new asset, we don't have any accumulated depreciation, right? So we're taking the cost, that's straight 11,000. We're not deducting it from anything because we just bought this. Then we say times. Guys, the weekend is over. Come, talk to me. Yes? 20 over 100. Okay? Times 7. Why 7? Yes, 9 over 12. Okay, and that gave us what? 1,000? All right, everybody happy with that? So now we have, you can even label it, new, dip, and here we have the old depreciation. Okay, there's nothing else for us to calculate. We can now record. So like I said, step number 1, we're recording the depreciation on that old asset. And here they also asked us to do narrations. Okay, so what are we debiting? What are we crediting? To record the depreciation on the old asset before we can dispose of it, what are we debiting? What are we crediting? Guys. Yes, you're going to debit depreciation. I'm just going to write here. Goodness me. I'm just going to write dip, and obviously this is on machinery. And then what are we crediting? Accumulated depreciation. Accumulated dip. Okay, and again you're writing machinery. All right, and then narration, what are you writing in narration? Say what? Okay, yes. What else? You could have even just written depreciation on machinery, something to that effect. Remember, narrations were not strict, guys. We just need to see, do you know what's going on in the transaction? With 4 or 5 words max, nothing more than 5 words. If you give me more than 5 words, you're now writing sentences. It's supposed to be a phrase. Does that make sense? Okay, right. So we've dealt with that. Now, what's the next thing that we need to do? Now we can begin with our disposal. And we said step number 1 is what? Removal of the cost price. How do we go about doing that? Yes. Yes, we're going to credit machinery. And if you use equipment, according to your memo, you also were supposed to get the marked. But had it been up to me, machinery, equipment, okay, yeah, it's kind of the same thing. Yeah, okay. All right. So we didn't put in the amounts. Sorry. Here we said this was 100. Okay, and here 100. Okay, and then here we said, what are we crediting? We're crediting. What's the other account that's affected when we dispose of an asset disposal? Guys, every step of the way, when we're dealing with a disposal, we know that asset disposal is involved, right? And then there's another account. The only question is, are we debiting or are we crediting asset disposal? Does that make sense? But it's always going to be asset disposal and another account. Okay, asset disposal. Okay, all right. The cost of this, they told us, was 6,000. Well, this was very straightforward. Ah, sorry. We're supposed to be crediting machinery, not debiting. My bad. How come none of you corrected me? Why? All right, and then obviously here in the narration you would have written removal of the cost price or transfer of cost price to asset disposal account or asset disposal or disposal. Does that make sense? Right. Then we move on to the next one. What's step number 2? I just told you guys these steps. What's step number 2? Removal, right? Removal of, and remember when we say removal, we're saying we're removing this out of the books because we're disposing of the asset. So we're saying we're now removing this cost of this asset from our machinery account. Does that make sense? We no longer have the asset, okay? So again, we know that should we be debiting or crediting accumulated depreciation? What are we supposed to do? Since we are removing it from the books, we should be 100%. We should be debiting because it's a negative asset. We're constantly crediting it whenever it occurs. Okay, so here, and this is obviously on machinery. And they told us how much was accumulated depreciation. It was 4,000, but that was before we did our depreciation calculation over here, isn't it? Before selling. So should we add this 100 Rand depreciation that took place? Or not? I'm only getting one response. Yes, gentlemen. Should we? You're discussing accounting. So, should we add that 100 Rand or we'll leave it out? Since we're removing the accumulated depreciation on this asset, since we're disposing of it, all of the depreciation that has incurred, in other words, all of the accumulated depreciation needs to be removed. So we should do what with that 100 Rand? We should definitely add it. We don't want it on our books. Does that make sense? Okay, so here it's a plus 100. Okay, so in other words, the total you should have here is 4,100. Okay. And then obviously the other account is asset disposal. Right, okay. So that was that. Next step, what did we say the next step was? What was step number 3? You must record the sale. Okay, can you now see why I give you these steps? Bank recon gave you steps. Can anyone recall the steps for bank recon? Creditors and debtors recon, we have steps. Okay, you guys must know those things. Okay. So we said record the sale. How did we sell this? We sold it for cash, so which accounts are affected? So what are we going to do with bank? Yes, we're going to debit. When we know from 1A, whenever we receive cash, we debit bank. And how much did we receive? Yes. Okay. All right. And then the other account that's affected? Asset disposal. Can you see? You don't even need to think about this. All right. You shouldn't need to think about this. Guys, are you guys tired? What's happening? Monday. Was your weekend at least fun? Why? Why exhausted? All right, recording of sale or recording of disposal of assets. That's what your narration should have been. Okay, something to that effect. All right, last step for the disposal at least. What's the last step? This is the last time I'm revising with you guys. When we finish this module, I'm gone. I'm gone. I'm not revising anything because I'm talking myself up here. Yes, Kate. Profit and loss. Did we make a loss or a profit? Okay. Now, at this stage of the game, you guys should be able to immediately already recognize, did we make a profit or loss before we do anything? Before writing on a piece of paper, you should be able to see. All right. We sold this for 2.4. What was the carrying value on 31 March at the point of sale? We know that the cost price was 6,000, right? We know that the accumulated depreciation at the point of sale on 31 March, we calculated it here because we removed it from the books, was 4.1. Not so. So what is the value of the asset? 1,900. So if the value is 1,900, but we sold for 2.4, did we make a profit or a loss? We made a profit. A profit of 500. So what are we debiting? What are we crediting? If we made a profit, is that an income or an expense? What do we do with our income? We credit. All right. So that means we're obviously debiting asset disposal. All right. Someone say so. And obviously we're crediting, as you guys mentioned, profit on sale of asset. And we know that our profit was 500. Okay. Right now with this question, it was easy for us to do those calculations in our head. All right. But you guys might have the one that's a little more challenging. And please, guys, write out your workings. So if you give me 400 instead of 500, I can see, they were at least on the right track. They knew what they were doing. It's just the finger, the pressure of the test. Maybe a free. No, those are free. Those are free. Yes. So you can see, and then I'm revising so you can see, okay, this is where, I need to do some work. Okay. Right. Then the last thing we needed to do in relation to this question was now record the depreciation on the new asset that we bought. Okay, so how do we do that? Because remember, we're at year end, right? So we need to record that too. How do we do it? We debit depreciation, yes. And then again, this is on machinery. All right, and then we credit what? Accumulated depreciation. Again, on machinery. Nice, this was easy, right? 3 marks. Not so. Can you see what I was saying? I know you were sick. Someone said they were sick. Why? This was not one of those. We're dodging if you were dodging. All right. No, it's not like that. It's not like that. Okay. All right. So everybody happy with question 2? Right. Okay, and then there obviously depreciation on machinery as your narration is perfectly fine. Something to that, or depreciation on new machine, that's also fine. Okay. Right. Cool. Then question number 3. Remember I told you guys, they can ask you anything when it comes to these financials. They can ask you to do it in the general journal. They can ask you to do it in the general ledger, ask you to do it in the financial statements. Here they were kind. They said just do a post-closing trial balance. All right? So that's why when I looked at this paper, I said, my students, bunch of geniuses. I know they've done the things. Okay? And to be quite honest, I was quite happy with how you guys perform, honestly. Okay? So I think my lowest was 26%. Look, you guys have seen this, right? You come to the test or the exam and you see faces you've never seen before. Never seen them in class. Am I lying? We know that we have students on the register we have never seen before. All right? Maybe they're repeating, maybe they're just not interested. So we know that chances are things are going to go left for those students. Okay? Right. But what's important is that those of you who actually are trying to get this done and dusted are obviously in a position to do so, meaning I must show up and do my bit. All right? But 2, you also have the resources and so forth to do so. Okay? So, yeah. I mean, even those that might not have managed to cross over, we're looking at majority of it was like a 40 something. Okay? And I say this, it might sound wrong, but I say this in the best way possible. I'm happy that you attain those type of marks, right? Why do I say that? Because it lets you know, it's better for you to get that here and now. It lets you know, okay, how I'm going about this is not necessarily the best way. Okay, there's something wrong in my preparation. Some of you who got 60 something, you know you're capable of getting a 85 or getting a 90, but you left it too late. You're realizing that now looking at your mark. Does that make sense? So this is feedback as to how, and this is why I said at the beginning, what's done is done. I'm not worried about what you've done now. I'm only concerned about the things that we still have to do, because that's what counts. What's done, what we did yesterday is done. Okay. Anyway, so I think let's quickly take a break. Let me not get into this. And then we will do the adjustments in the next session, and then we'll do the theory to learning unit 6 and 7, and then we'll call it a day.